Welcome to our Ask an Expert show, where I invite a fellow professional in the US UK cross-border space to come in and talk to me about the issues we think Brits in America need to be aware of if they are going to thrive here. I am delighted and honoured to be joined today by someone I greatly admire and like enormously, Mr. Chris McLemore. Chris is a US tax and estate planning attorney living and working in London, running the law firm McLemore Konschnik with his law partner, Kristen Konschnik. McLemore Konschnik is a London-based boutique law firm of US lawyers specializing in tax, trust, and estate planning advice for US citizens and green card holders and their businesses, whether based in the UK or internationally. Now, there is so much that Chris and I could talk about, and there's so much that I want to talk about today, but we have to pick one thing. So today we're going to focus our conversation on US tax compliance, specifically one of the programs available to US taxpayers to voluntarily come into compliance before they are under IRS audit or investigation. This is an incredibly important topic. It's massively understood if people are even aware of it, and I can't stress enough how fortunate we are to have someone of Chris's caliber on to share his experience, his knowledge, and his insights. So, without further ado, let's get into this. Hi, Chris. Welcome to We're the Brits in America.
Thank you, Richard. That's a very kind introduction there. It feels a bit funny for me. You're sat in the U.S. with your accent, and I'm sat here. I'm actually the American in England, but for purposes of this podcast, I'll stick with your title.
So, full disclosure, people, my firm has a relationship with Chris's firm, as do many of our clients. So that introduction was based not just on reputation alone, but on my personal experience. But one of the things that I've enjoyed as I've got to know Chris is he is, in some respects, he's the mirror of my situation. So I'm a Brit, married to a Brit in America with American-born kids. Chris is an American, married to an American with British-born kids, and it's been aside from the legal advice and the guidance and the counsel, we've had some great conversations on swapping notes and comparing stories.
Yeah, so many of my clients are based here in London, and so my worldview has shifted. I've been here 17 years, so my worldview has shifted so much. So it's funny not only to talk to somebody who's in the States, but to talk to somebody who's a Brit who's in the U.S., because you come with, I pretend to be British. You actually are British. But to hear you kind of transplanted into the U.S., it's a bit of a mirror image, and it's a refreshing take on the country that I once called home.
Well, great. Well, I was meant to before I said we're honoured to have you on. You have such a reputation, in the UK. I was actually, I'm going to just be the sycophant for a minute, but I was talking, I can't remember who it was, to be honest with you, but I was establishing a relationship with a London-based UK-US tax accountant, and I mentioned that I knew you and we had this relationship, and he said, Chris and his wife, they're the US tax royalty in London. So that's... that's your station. I don't think it gets much better than that for an American being called royalty in the UK.
Well, I know how a lot of people actually feel about royalty in this country, so I'm not sure that's a compliment. But I think if we take that at face value, that's very kind. I think that the one benefit we have is that we've been here for a long time. So nearly 2 decades now of sitting in the UK. But I'm licensed in the state of New York, so I'm a U.S. lawyer. And I think the real difference is, because there's a lot of people who do cross-border work, but do it from outside of an international setting, is that everything that we do and everything we touch on a daily basis is U.S. plus something else, right? I'm never doing domestic, only U.S. work. So that means that every matter that we pick up has an international aspect. Many times it's multiple international aspects. And so that just really creates a unique position for us, and one that I don't think most people have. Most people have an international practice and a domestic practice, but not purely international.
It's not just that. Nicely deflected, by the way, at the beginning. But it's not just that. So I've been here 10 years now, and I've met quite a few American lawyers. And American lawyers they either give you the ick, or they're incredibly impressive. And with the impressive comes often an intimidation. And my personal opinion of you is, and I think this is other people feel the same way from what I've heard is you have the impressiveness of the American attorney, but you have a fantastic way with people. You're not intimidating in that sense, in that people feel there's an empathy and compassion that is sometimes lacking in the profession, and that is hugely appreciated. And I think that that uniqueness is what drives a lot of your reputation. So,
well, thank you. I mean, I try that. I think clients, some of the issues we talk about, I mean, even things that are fairly neutral, like estate planning, it's still a very intimate relationship. You're talking about things like guardian of minor children, death, subjects that can be quite intimidating in and of themselves. Even things like talking about your finances in a very deep and open way. I'm sure you see that, even though you're in the finance business, I'm sure sometimes people don't want to share. And so you kind of get a download from people. And so you have to be sensitive to that. And sometimes tax matters are things like audits or investigations or just downright confusion. And the problem that I see is that so many people try and drive clientele through fear, and that's never been my way, because I don't want a terrified client. I would like a client, but I'm not going to get them through fear, and I'm certainly not going to maintain that fear. And, there are some people who do that. So I had a friend call me because he knows another American here in London. He himself is American here in London, and he knows another American. And they needed to do some tax compliance. And so they got in touch with an accountant. And so he told me this person's name. And I immediately said to him, have they told the client they need to get fitted out for an orange jumpsuit yet? And he just started laughing, because that was the response that the accountant had. It was basically, you're not in compliance. And these were minor non-compliance issues. It wasn't as though the person wasn't filing. They've been filing, but they got some things wrong. And in fact, they used a qualified U.S. accountant here in the U.K. So it wasn't even like they were trying to do it themselves. They'd gone to somebody, relied on that person, and they went to a new accountant for whatever reason, and that person crawled all over the return and said, these things have been missing, and by the way, there's jail time involved. That's not the way I want to run my practice. And it's certainly not the way that I want the kind of broader U.S. advisory community in the U.K. to be operated. And for the most part, it's not. But some people still do prey on fear. And it's a really good way to get people in the front door. It's just not the door I choose.
There is a fine line. I absolutely agree with you, right? But having done this for a while here now, there is a fine line, though, between scaremongering, which I absolutely don't endorse in any way, shape, or form, and trying to jolt people sometimes into, this is a big deal. Or even if it doesn't have, it could be a big deal. You need to deal with this, because what I find is, dealing with this with Brits in America, is people come over here and have no real awareness for the intricacies, the difficulties, the additional challenges, the nuances, and they don't really want to know after a certain point. And when we speak to people, and very often within the first 10 minutes of a conversation, things start popping up that you realise, and then people fall into two camps. There's either the camp who are open to this and want to deal with it, and the rest who are just like, oh, it's not a problem this far, so I don't think it's a problem going forward, so I'll just carry on. And I don't want to fall into fear mongering to get them to see that it might not be a serious situation now, but it could become one, or just letting them go about their merry way. Yeah,
I think I probably see less of that than you, because by the time you get to a lawyer, you kind of have picked up on the fact that it's serious, or that something. And not everyone, some people just don't know and they come to you for advice, but most of the time people have had that kind of come to Jesus moment. Now, clearly some people will try and push back, right? And, they'll say what they've said to you. We can keep not doing this, or we didn't, this was a gray area, so we never reported X, and we're going to keep doing that. That's not most of the people that come to me, but I tell them, historically, you've had your head in the sand. There's no more sand, right? That's the problem. Because back 10 years ago, when there wasn't FATCA, when there wasn't international awareness, when there weren't tax lawyers everywhere, accountants, you couldn't get good advice. There was somewhere to stick your head. And now it's just sticking out. And that's a problem. Now, some people still say, look, Chris, I'm going to, thanks for the advice. I'm going to go consider my options. And you don't hear from them. And I assume that some of them try and find another pile of sand. But that's a tough job. And, many times what I find, because people have the fear of God in them for whatever reason, by the time they come to me, is that I'm actually talking them, away from the cliff. So, sometimes you've got to, frighten people to say, look, this is serious. It's not a joke. You need to take care of these issues. A lot of times I'm saying, it's going to be okay. We can make this work. So I don't have to stand in that role. Yeah, we can get you from A to B. There's a lot of, aggro and admin in the middle, but, we can get you there.
Am I right in thinking, and I probably shouldn't jump into this right now, but I'm also right in thinking that not only is there no more sand, but now that you've been made aware of it, potentially if you carry on the path you're on, you lose good options, right? Because you arguably you can go from this concept of willful or non-willfulness. Non-willfulness, sorry, Gov, I didn't know, I tried my best. Once you've been made aware of something, you carry on doing it. Maybe you can no longer say, it's hard if you to hold your hand up and say, listen, I didn't know. I thought I was doing the right thing. And then maybe you lose some of the good options.
Yeah, I mean, and look, there are certainly some things where there is not a clear position on whether asset or income needs to be treated one way or another way. Does something need to be reported? So sometimes people can take a view and say, look, I hear what you've said, and I accept that some people will report on that basis, but I'm taking this alternative view, and that's in and of itself not necessarily problematic. But there are times, certainly if it's somebody who comes to you and they've never filed a tax return, and they're American, and you say, I understand that this is not something you're aware of, which we still get, amazingly. We still get Americans, especially if they're born in this country, they may have never known that they needed to file. There was a lot of poor advice being given out, historically. But when you lay out chapter and verse, it's hard for them to then later say to somebody, I had no idea, right? And that's problematic.
Right. Let's set up why I wanted to have this conversation. So we're obviously working with Brits in America, but this applies, I think, to any expat, any person coming to America. America famously has this almost unique taxation system, citizen-based taxation. It has the legislation Chris alluded to before, FATCA, has another one, Bank Secrecy Act, which is to do with the FBAR. Essentially, what I'm getting at here is when you come to America, when you become a US person, the tax rules are different to what you're used to, probably. And they are probably more, there's more of them. The repercussions of getting them wrong are potentially more serious. And people, if you move here mid-career, or early mid-career when you have assets in a different country, I'm talking about the UK, obviously, or income streams in the UK, and you come to America and you don't work with someone, as still, I think the vast majority of people don't. They don't work with a cross-border person. They don't do pre-immigration planning. They move here and they just carry on doing what they've always done. They think the way they did it in the UK, they can probably carry on doing something similar in the US. And what that means is, by the time they get to us, honestly, more than 9 times out of 10, within the first 10, 15 minutes, we spot problems, shortcomings in their US filing, whether it's unreported income or just missed informational returns that they had no idea about. It's the exception rather than the rule. And that exception comes when they're working with almost always with a UK-based, UK-US accountancy firm, a buzzer cuts or whatever it might be. Every other time, there's problems. And this can cause, it can be something as simple as not reporting certain assets on certain forms, and it can be something as serious as unreported income. And this can cause people searching around for more sand to bury their heads in, to carry on that metaphor, or it can lead to people asking, like, I can't live like this. The IRS are very successful putting the fear of God into people, and then wanting to sort it out. So I want to talk to you about some of the your experiences of people being in non-compliance, but then the solutions available to them, specifically the streamlined solution I alluded to earlier.
Yeah. I mean, I think one thing that people, especially coming from the UK, so the UK is unique. Well, like the vast majority of countries in the world, it operates taxation on the basis of residence or situs. But for income tax purposes, if you're resident here, you pay income tax potentially on a worldwide basis. And if you leave and are non-resident, you don't file tax returns in the UK. But also, many people in this country don't even file tax returns because your income tax is taken out as a PAYE, pay as you earn, scenario. So when I was a junior lawyer, I didn't have to file a UK tax return because the only income I had was my wage income. It was taxed. It was fine. So you're coming from an environment, if we're talking about UK to US, where your engagement with an accountant or tax professional might be non-existent to limited. Then you go to the US, where not only is the US system more complicated, but now you've got cross-border issues, which is in and of itself even more difficult. And I say to clients when I'm talking to them here, and this is not Brits going to the States, it's usually Americans here, but it works in both settings. If you've got a cross-border situation where you've got income and assets in two different places, the vast majority of those people will need an accountant. Many of them will need a financial planner. Some of them will need a lawyer, right? I'm not naive enough to think that everybody needs a lawyer. But what I will say to you is that the people who don't have number one more commonly need number three. If you don't have an accountant, it's a better chance you need a lawyer. And that's a situation that comes up over and over again. I'm preventative, but it's going to take a tax advisor, an accountant, or somebody to help you out. And it's just the nature of not only have you gone from a system, if you're coming from the UK, that is much more straightforward. And people here in the UK think HMRC is bad. You can pick up the phone and call HMRC, right? Again, the fact that you don't have to file a tax return in the vast majority of scenarios, the fact that penalty mitigation is much more straightforward. And then you go into the United States, inevitably problems are going to arise.
And I find people carry those expectations over, and when they're confronted with the reality that it's different over here, that can be a very rude awakening.
Yeah,
a very rude awakening. And I'm plugged into both worlds. So when I see tax advisors on LinkedIn lamenting the state of HMRC and the penalties, it's laughable to me. People getting angry over £100 penalties, and I just think, if you only knew. I mean, basically, the IRS's starting offer is 10 grand.
Yeah, it's a different world.
It's a different world altogether. But the point I'm trying to make is, and I love the way you put it, I'm going to lift that and use it. If you don't have an accountant, and not just any accountant, a cross-border accountant, a specialist cross-border accountant, the chances of you being in non-compliance are just dramatically higher, and the vast majority don't, because they're not used to paying for tax advice or tax return submission. Certainly not used to paying for someone who's US qualified, UK qualified, and understands the interaction between the two, which obviously comes at a premium. So if they do have an accountant, it's probably not a cross-border accountant, and all the problems that ensue from it. So it's such a common problem. It's endemic. But then it comes about, right? Solutions are available, right? The IRS is. I mean, I don't want to put words in your mouth here, but the IRS is aware that people are in non-compliance in massive numbers, and there are programs available to come in from the cold. Be it you've been, and these aren't the people we speak to or I want to get into today, but you've been intentionally, purposely doing things you shouldn't be doing or hiding things. There's programs that exist there. But what's more relevant for us and the people we speak to is, I haven't been filing all the reforms required under FATCA. Right, so it's just purely informational return deficiencies or delinquencies, as they call them, or I've got some unreported income. I haven't been reporting my bank account interest, UK bank account interest. I had an ISA, or I have an ISA in the UK that I thought I could continue to treat tax-free, and I've got unreported income and dividends and gains from my ISA. And I could go on naming examples. They're two really common ones. If that situation presents itself, what options does someone have, Chris?
So if we think back, just a little history lesson in terms of compliance, correction programs in the international space, it really goes back to around 2008 or 2009 when the IRS created the Offshore Voluntary Disclosure Program, which was really targeting, at that time, there was an increased focus on taxpayers, in particular in Switzerland, who were intentionally stuffing money away and not paying tax on it. And UBS got sued by the Department of Justice, and it was clear that they were going to have to turn some names over, but you didn't know if your name was going to be in that mix. But there were some financial institutions, and it wasn't just Switzerland, but that's where a lot of it was initiated, and it was real tax evasion. So clients with numbered bank accounts, and they actually had burn notices with their statements, so the bank statements would be incinerated and never leave the building, so nobody would ever
Wow.
catch the post and find that you had this bank account. So that was the backdrop against which the OVDP was launched. And that created a lot of awareness about the obligations to file tax returns if you're outside of the United States for people who either didn't know at all or didn't understand the seriousness. We hear all the time, I knew I should have been doing it, but I didn't know tax, and so I didn't think it mattered. But that put an intense focus. It was in the papers here, and so a lot of people came out of the woodwork, but they said, look, this program doesn't apply to us because there's a really high penalty associated with participation, which makes total sense because it's for tax evasion. So if you've been evading tax, you shouldn't be surprised you're being hit with a big penalty to become compliant. And taxpayers and the practitioner community said this is not an appropriate program for all of these tens of thousands of people who want to become compliant but didn't know or had good reason to not file. And so in 2011, the IRS launched the first iteration of the Streamlined Procedures, and then they were revised in 2014, I think I'm getting these numbers right, to roughly the current program. And the Streamlined Procedures, that program itself is split into two programs. There's the foreign procedures for individuals who live outside of the United States, and there's the domestic procedures called the Streamlined Domestic Offshore Procedures for individuals who are resident in the United States. And the terms are slightly different. But at that point, the IRS basically said, look, there are two programs now, and so it's one size fits all. If your behavior is willful, you go in that door. You go in the voluntary disclosure program, you pay a huge penalty, and that's the right outcome for you. If your behavior is non-willful, Streamlined Procedures. And you can go in that door and participate in that program with much reduced penalty and reduced number of years to file, etc. And so that was kind of the gambit. You either go in the voluntary disclosure program, you go in the Streamlined Procedures. And again, this is for people who have what we call unreported offshore income. So that means income from outside of the United States. So if your problems are only domestic U.S., it's not appropriate for you. It's for people with unreported offshore income. Now, we know that there are some people who don't fit either program, either because they were definitely non-willful, but they don't meet some technical requirement of the program. And so there's some people that, fall in the middle. But there's another program for individuals who have only failed to file informational returns. So it's called the Delinquent International Informational Return Program, the DIIR. And that would be if maybe, you should have been filing Form 3520 to report an ownership interest in a non-U.S. trust, and you hadn't been doing that, you could become compliant by using those procedures. But those don't work as well or as straightforward as a manner as the Streamlined Procedures, but they exist, and it's a good way to become compliant. So there are several options. The reality is, for most people, it's going to be the Streamlined, your clients, the Streamlined Domestic Offshore Procedures, where they can become compliant. And the terms are really generous. It's 3 years of back tax returns. So you file tax returns for the 3 most recent years where a deadline is passed. So if you were to be going in today in that program, well, I guess your clients are domestic, so they would have filed their 23 returns. My clients are foreign, so they haven't filed 23 yet. But let's say, so you'd be filing an amended 23, 22, and 21 return. You file 6 years of FBARs and other informational returns. You pay the tax that's due. So on the basis of that creates a tax liability. You pay the tax. You pay an interest component. And unlike the foreign procedures, so for people who haven't been living in the United States, there is a penalty charge for participation in the domestic streamlined procedure. And it's effectively 5% of the assets or accounts that created the non-compliance. It's more nuanced than that, but if you had, a bank account let's say you had an investment account, somewhere here, St. James Place, here in the UK, and you weren't reporting it, or you hadn't been reporting the income from it, it's worth $1 million. The penalty would be 5% of the value of that account. So it can be quite big. Now the IRS would say, well, first of all, the penalty is, it's a penalty, so that might hurt a bit. But the other is, in exchange for all of the other penalties that we could possibly assess, it's probably still a bargain. Now, the streamlined procedures, they're very light touch from the IRS's perspective. There's not a lot of guidance out there. There's not a lot of notes. They've created a rough and ready approach for people to become compliant. So for some people, the penalty is, they might feel inappropriate, in relationship to the non-compliance. But in some cases, it's small to frank all these potential penalties that you might have, for informational returns. So that's in broad brush the program and how we got here. But it can be a really powerful way for people to become compliant if they've got something missing.
Let's work an example here. So let's say we speak to someone, this is based on a real example, honestly, who's been here for 20 odd years. Let's just say 10 years, right? And that entire time they've had an ISA from the UK. This is a cash ISA in this case. Let's make it an investment ISA. It's an investment ISA, and they've had unreported, they've just not been reporting the dividends that have been received from it. They thought it was all tax-free for 10 years. So that's 10 years of unreported income from dividends, 10 years of if they made any trades, if they made any capital gains, unreported capital gains, plus they've not been reporting it accurately and correctly on various forms. So if you determine it's non-willful and they apply to enter the Streamline program, they don't have to go back 10 years and pick up all the income and gains for the last 10 years, and the cost that's associated with amending 10 years worth of returns. They only have to go back 3 years and amend their last 3 tax returns to pick up any income and gains that was realised or received in the last 3 years, and then pay tax on that, and then pay interest, from the date that tax should have been paid. So that in itself is potentially, if you had accounts going back 10, 15, 20 years, that in itself is potentially should be very welcome news. You only have to go back 3 years. Incidentally, what happens to the previous years?
Well, there's a couple of points there. So if you've been filing tax returns, on a good faith basis, you had an accountant doing it, and you just hadn't been reporting the ISA income, which is very natural, because in this country, ISAs are tax-free. It's meant for a way for the everyman to get invested in the stock market, to take advantage of some of that upside so that we can all benefit, do it on a tax-free basis. And in fact, an ISA doesn't even appear on your UK tax return if you have to file one, because it's not taxable. So it's not as though you report it and then you back out the income. It just doesn't even show up. So sometimes people say, look, here's my UK tax return, and the ISA is not there, so nobody even thinks about it. So it really natural thing to forget about. But if you've been filing these tax returns in the US on a good faith basis, there's a statute of limitation period. So the IRS probably couldn't go back 10 years on the income tax unless there are other forms that should have been filed that leave the statute of limitations open. So it's just going to depend on the circumstances. But you're right, there is some comfort in having...
Well, Chris, let me go, if I can just jump in there for a second. Let's say it's an investment ISA. I'd put good money on it that right now there are informational returns missing. There will be no 8621s for the PFIX that it's undoubtedly invested in. There may or may not be the 8635, which the reporting, the one where you report the account level. So I think in most situations, maybe not a cash ISA, but in those situations, I bet there are informational returns missing. And then you have the argument, is the statute of limitations clock even ticking?
Yeah, a stocks and shares ISA will almost certainly be invested in funds, which are passive foreign investment companies, or PFICs for U.S. purposes. So in those cases, you would need to file Form 8621, and the statute might still be open. So you may or may not, depending on the circumstances, have a broad period of years that could be under audit by the IRS. But you're capped at 3. And your question is, what happens to the years prior to that third year back? And one of the benefits of the old offshore voluntary disclosure program that I mentioned was for willful behavior. And in that program, you had to file 8 years of returns. You pay a huge penalty. So it was a really onerous program.
But hopefully avoid criminal prosecution. I don't think we specified that, but just if you've been willfully evading tax, you're just trying to, it's going to cost you. You just want to avoid criminal prosecution. Yeah. And that's valuable.
Those were big checks, and people happily wrote them, right? Because you were avoiding, as you say, a lot of penalties, but also potential criminal exposure. So, but one positive of that was that you got a closing agreement at the end. So the IRS would write, and say, look, we're done and dusted, and as long as you haven't committed fraud and you've been upfront with us, this is it, and we're not going to go back on the previous years. But you don't get that kind of closing agreement in the streamlined procedure. In fact, you don't even get notification that it's been accepted. The package will be sent in, it'll be dealt with. If you have to pay tax, you'll see that the check gets cashed. The IRS may write to you and say, oh, you forgot to, calculate this interest in this way. You owe us $10, we owe you $30, whatever. Those things might come out in the wash. But you're not going to get a letter at the end that says, thanks very much, Richard, you're back in the system, everything is square.
They process your return like just an amended return. Like we think of it like you're entering this program, and you are, but then you separately have to think, I'm just filing amended returns, and amended returns get processed like amended returns. So it's not like you go into a separate channel where different things happen. You're entering a program, a protective program, but you're still submitting amended returns, and the usual back and forth that you refer to is common.
Yeah, exactly. And the streamlined statement that accompanies that sets out why your behavior was non-willful and why you meet the requirements of the program and should be included, that gets processed separately. But the returns, you're right, they go in, they get processed as any other returns would do. But you don't get a closing agreement. So there's an understanding with the IRS that if you do the streamlined procedure and you're accepted, that you're not obliged to go back and address those prior years. But you're not going to get that in writing. And that's just because of the nature of the program. So, we would tell clients, once it's over, really once you send that in, once you've gone through all of the work, you've done the returns, you've prepared a statement, it's been combed through, you've explained your situation. And the IRS has said, we want the good, the bad, and the ugly facts, right? You don't just tell them the good facts like you didn't know or whatever. You tell them the bad facts, right? Like if a friend raised it with you and said, well, maybe you should talk to an accountant, or if, whatever it was that is not an ideal fact in the scenario pattern, you got to explain that. So you've done that, you explain all that behavior. Once that goes in, we would say to clients, treat yourself as a compliant taxpayer at that point, right? You've done what's been asked of you. The IRS has said, if you want to become quote unquote compliant, file 3 years. You've done that. And so, the prior years can be left alone. Now, and some people say, well, that feels too good to be true, right? In some cases, somebody sold an asset 4 years ago, right? So it's just outside of the streamlined years. And that tax doesn't appear on the returns. You don't have to submit them. But some people sold a business 1.5 years ago, and that is in the streamlined years. And that's just the way that it shakes out. Now, for an individual taxpayer, that's either good or bad, but across the board, that stuff's going to even itself out. And more importantly, it's getting taxpayers compliant, some of them just straight up back in the system. And I think that that's clearly a priority of the IRS. Now, one distinction I should make between the two programs is that in the offshore program, so the people I see here in the UK and elsewhere who aren't resident in the US, they can file 1040s. In other words, they don't have to have been filing a tax return and are now filing a 1040X to amend that. We have many people who have never filed a tax return or filed and then they moved to the UK and thought, I no longer have an obligation and stop filing. And that's permissible in the offshore program, or the foreign program. In the domestic program, you can't file a 1040. You have to be filing a 1040X. So you have to have been filing tax returns for the relevant years, which again is one of those distinctions that can sometimes catch people out.
Going back to your point about the anxiety people feel, on a few points, is it too good to be true? I remember when I was first getting scripts for this program, I remember you saying to me, look, the IRS knows that millions of people are out of compliance. And these programs, and for them to properly review and audit and investigate, it's an impossible task. Whereas these programs encourage people en masse to come into compliance and pay tax in one go. That's what. Think of it in terms of that. This is a catch-all program that's designed to catch millions, or hopefully millions, of taxpayers and produce revenue. That's what it's aimed at. And when I start coming at it from that angle, and I realised that those are the terms of the program. As long as you meet the terms, you should, to your point, you should then walk away feeling confident. And the other thing that I'd like to add to that is, I've seen this done. First of all, we always recommend having an accountant, a cross-border accountant, and a tax advisor to do the statement. And in my experience, there is an enormous difference between when the returns are handled by a local accountant in the US. Sometimes clients just insist on using who they've always used, or when they use a cross-border person, usually someone you and I both know in London or around. The difference is stark. The ones where it's been handled by the local person has almost invariably been a disaster. I was about to say something stronger then, but it's just been a disaster. From completing the forms to submission and what follows, it's just been a nightmare. But when you've used a cross-border expert who understands all these FATCA forms, you and I keep throwing numbers around, we know what they mean, and a cross-border accountant does, but everyone else doesn't, including most accountants in the US. But when you've used a cross-border tax advisor, and they've combed through your affairs like this, and you've liaised with a tax advisor like yourself, and you've downloaded all the information, good and bad, and you've submitted it, people are often anxious about those returns. And I say to them, look, I'm not a professional here, but I tell you, my reading of this is, these are the best returns you'll ever submit. These have been handled by a top cross-border UK-US tax accountant. You've worked with a top UK-US tax attorney who's also reviewed the submissions. Like, if ever you're going to get audited, it's these returns. You've had these are the ones that are going to be squeaky clean. And if they're not, you can say, look, I hired the best. I told them everything. So I think that once I explain it that way to them, people are, okay, yeah. You don't want them going to early years. Or if you go back to your local accountant, things could get dicey again. Heaven forbid, no. But
I spoke to somebody just a few days ago, actually, and he'd been filing tax returns that he was trying to do with a non-cross-border specialist. So it's kind of the two of them. He had a local accountant who didn't have international expertise, and then he was doing some of the international information returns. And then it transpired that he hadn't been doing everything correctly, no surprise. And one thing he hadn't done is filed Form 3520 to report foreign gifts that he had received. So he received an inheritance from an aunt or an uncle who'd passed away, and this was a lot of money, and it was material money for him, and it didn't get reported correctly. And so he called around and he talked to a cross-border accountant based here in London, and they said to him, oh, actually, you should have filed this form and you should go in the streamlined procedure. And so I was talking to him and I said, so that's great news that you got this cross-border accountant, you've instructed them. And he said, no. I spoke to them, but I'm going to do it myself with my local guy. And I said, but can't you see the problem? The reason that you misfiled these returns in the first place is because you and the local person didn't have knowledge. And he said, yeah, but now we know. Now we know, Chris. And, I was really struggling. I said, look, you know about that thing that you've missed, but it's not as though your tax knowledge went from limited to complete. It went from limited to limited plus, right? And there's still this whole range of things that you may be getting wrong. And I said, don't you see how that can be a problem? And he just couldn't, it didn't dawn on him that he needed to do something. The phrase that comes to mind, he said, how have I been complicit in creating the situations that I say I wish to avoid? I mean, that's him all over, right? What am I doing to create this problem again? And that's not getting the advice that I've been told I need. It's to shop around and take additional bits of information here and there. And so, I wished him well, but you can't.
This is one of the most frustrating things. One of the things we bang on about is that expats in America, specifically Brits for us, you don't know what you don't know. And that's one thing. But when someone is confronted with something they didn't know, the repercussions of that, that the non-reporting of an inheritance, 25%, right, potential penalty. When you're confronted with something you didn't know and you're confronted with the potential implications of it, to then not be aware of not be thinking, what else don't I know?
Yeah.
I just don't know what to say to it.
That was the penny that I was waiting to drop, that you have learned something, right? But more importantly, I think that the issue is this. It's those returns might now be correct. I don't know whether they are not because I don't have the numbers and I'm not an accountant. But what I know is that there is another problem that you won't know about in the future. And you may or may not catch it. But that's the value, in my view, that, and this is true with any expert. It's not just lawyers. It's not just cross-border accountants, right? Expertise is expertise for a reason. But with a cross-border accountant, it's that they will spot those other issues in the future for you. When it comes time for you to take a distribution from your pension, when it comes time for you to roll over your pension, when any of these types of things comes up in the future and it's a different fact pattern than you have now, it's going to be new territory. And those guys can spot that stuff all day long, and they will keep you out of trouble. It's not that they'll get everything right because they'll make mistakes too, but they will keep you out of trouble, and it makes you feel so much better having relied on somebody who knows what they're doing, in my experience.
But also, if you've hired an expert, this is a different topic for a different day, but reasonable cause. You need to establish that the person you're employing to help you out has got the requisite skills and experience. And if you're working with a cross-border professional and they get it wrong, you can say, I told them everything and they got it wrong. And that's a defense. Whereas if you've gone around the corner and paid someone $200, arguably they don't know anything about this stuff. Again, it gets a bit flimsy. But Let's just go back to Streamline for a second. Let's say we've spoken to someone, we've told them, we've identified there's an issue, or you're speaking to them. We've identified there's an issue. We suggest Streamline might be a solution to get into compliance, and they balk at the penalty, the 5% penalty, and they say, well, listen, why don't I'm just going to submit the last 3 or 6 years tax returns, just submit them quietly, and it'll be fine, or well, look, I wasn't doing anything intentional, so I'll just correct it going forwards. What would you say to that?
Look, this is tough because as I mentioned earlier, the 5% penalty can feel really disproportionate. We used to do a lot more what you just referred to as quiet filings, and that's what historically we called them as well, and they still get called that. Before the Streamlined Procedures came about, so certainly during that period when you had the offshore program for tax criminals, and then nothing else, quiet filings were very common because people wanted to become compliant, but they weren't willful, and so it just didn't make sense to them, and the penalties were huge.
So just so people understand, quiet filing is just going back 3 or 6 years and just submitting amended returns outside of any program, just quietly filing them.
Yeah, it just means submitting the returns, outside of any program. It used to be that the London embassy had an IRS office, and they operated a kind of pseudo compliance program that was either 3 or 6 years of back tax returns. And the difference, and this is how it was explained to me by a very senior lawyer when I was very junior, because the program went away not long after I started practicing. The difference between 3 and 6 years was whether you passed the smell test, right? And it was kind of a, should you have known better? Okay, 6 years. Was it not a big mistake? Okay, 3 years. But those 3 and 6 year numbers are often said to correspond with the statute of limitations period. So it'd be 3 years normally, or 6 years if you had a substantial, understatement of income on your tax return. But because it's a quiet program, there's no program. Sometimes people file 3, 6, whatever it is. There's many different kind of iterations, but you just put the returns in and you pay the tax if it's there, and you just see what happens. Now, there's a couple of issues with that. One is, let's say you do have 10 years of non-compliance and it's still open. There's nothing that would prevent those previous years from being, reviewed. The Streamlined Procedures, as we just mentioned, it contains that cap of years, which is, I think, huge value. Because if you've not been filing correctly for 15 years, 6 years, it doesn't catch you up. That's just an interim transaction. The other thing is that the penalties can be really severe, especially on the international informational returns. So I think people think about the FBAR a lot. I mean, that was one that historically has been used. We talk about fear mongering, especially before the Supreme Court case that recently came out that said that the penalty is limited to $10,000 per form per year, effectively. There used to be people out there trying to scaremonger, saying it's $10,000 per account per year, and there's a 6-year statute of limitations period, but that's still $60,000 per account. If you have 10,000 or 10 accounts, do the math. It's this huge potential penalty exposure, and that's for non-willful failure to file. If it was willful, it gets even higher. But it was a really easy way for people to say, look at your penalty exposure. Man, you're lucky to be talking to me, because that's just huge. These days, the FBAR is less of a boogeyman, I think. I mean, still $60,000 is a lot of money, but that's not the same as it was before. The other thing is the FBAR penalty isn't being assessed willy-nilly, right? But other forms, we are seeing penalty assessment. And one of those is one we mentioned earlier, the form 3520. Now, this form, it's funny because it's used to report two things. It's used to report contributions to, distributions from, or ownership over a foreign trust. And you might say, well, I don't have a foreign trust. But if you have a SIP, which is your holdover UK pension, it's almost certainly structured as a foreign trust. It qualifies under the treaty almost certainly for pension protection, so you get the tax-free roll-up, but it's probably a foreign trust. And certainly, all of the U.S. accountants here in London would be telling you need to file a 3520 to report that. So you've got, when you contribute 35% of the value of the contribution into that foreign trust, if you don't report it on a Form 3520. And there are other penalties for ownership. And again, ownership is just, I've got this, it's what a grantor trust over there, that's my pension, I need to report it, I didn't, there's a penalty on the total value of that thing. The other thing that the 3520 is used for is to report the receipt of a gift from a non-U.S. person. So if you, Richard, as a U.S. taxpayer, if you have a relative in the UK who passes away and leaves you money, if that gift exceeds $100,000 in a year, so aggregate gifts from any one person exceeds $100,000 in a year, you have to report it. So let's say you get 500 grand, very generous uncle, somebody passes away, you have to report it. If you don't, the penalty can be up to 25% of the value of the gift. And it's important to note, the receipt of a gift is not taxable. That's not a taxable event. So you should just take that 500 grand, you should invest it with Richard Taylor, and the IRS will get their tax on the income. But you might have to pay 25% of that 500 just because you didn't report it. And the report on a 3520 for a foreign gift is a one-liner. I received 500K cash on this date. Hugs and kisses, end of. And we do see those penalties assessed. And, I had we had one situation where an individual had received some significant gifts from a parent so that this taxpayer could buy a property and invest in a business. So it was $1.5 million or something. The 3520s went in, but they went in late for various reasons. So and by late I mean just months late. And the taxpayer was was trying to get everything done in a timely fashion, but there were some significant barriers that prevented that from happening. So this was a taxpayer trying to become compliant, just reporting the receipt of this money. There was no tax that was being left out. They went in just a bit late, and penalty notices were raised. In the end, with interest, it was something like $450,000.
So they went for the full 25%. It's just
Yep.
for a few months late. No tax was dodged. There's nothing untoward going on. They just went straight in 25% plus interest. Give us that money. I mean, it's unreal. This is what people don't understand. They don't get. They just think I've done nothing wrong. I wasn't hiding anything. And because we're used to coming from a world of £100 penalties from HMRC, they don't realise. No, we're talking tens, often hundreds of thousands of dollars, even if there was no tax due.
Yeah, and the sensation that people talk about all of the time, they say to me, in a situation like that, and 1.45 million was a lot, right? So let's say it was 500,000, or even 125,000. Obviously be a very generous gift, but that happens with not a lot of infrequency. And people will say, why do I need to file that? The IRS isn't looking for me. And the thing that I tell them is that it's not about who the IRS is looking for. It's about who the IRS finds. And if you're that person who got found, 25% of the value of a gift from a non-U.S. person is going to feel like a lot. And knowing in the back of your mind that they weren't looking for you won't count for very much.
Because I remember you saying that to me, and I've repeated it so many times. And if I can just get this point across, people need to understand the penalty regime we're subjected to here is very, very, very different to anything you're used to. You don't have to have been, you don't even have to have underpaid your taxes to be at risk of this. So just don't find the next pile of sand to bury your head in. So that's why you shouldn't do a quiet disclosure. What about just? I mean, is it the same advice just for? Oh, just I'll do the right thing from now. Now I know I'll crack on from here. File forwards, right? That's what it's called.
Is it called that?
I don't know about my debt. I don't know where that came from.
So, just to be clear, there are cases where I think a quiet filing is appropriate. This all comes down to facts and circumstances. So, and there's nothing inappropriate with that, right? I mean, if you owe tax, or you didn't file a tax return you're supposed to, you can file it. I mean, it should be said that the IRS, it's discretionary whether they accept an amended return or not. They're not obliged to. But, there's nothing inherently problematic with filing an amended or a late tax return. And in some cases, a quiet filing might be appropriate. On a filing going forward basis, it really just depends on what it is that they've missed, and people will make mistakes in good faith. And in some cases, they do decide to just start filing on a going forward basis. What they have to accept is that non-compliance can linger, in some instances for a really long time. So that's going to have to be a calculated risk. And the thing is, with the streamlined procedures, if you become audited, then it's done, right? You can't then say, oh, thanks for getting in touch. I would like to enter the streamlined procedure. That doesn't work that way. You have to get there first. So it's not exactly a race against time, but there is a timing element here to be considered. So if the non-compliance is significant or the penalties are material, what you're doing by waiting is leaving open the opportunity that the streamline will be taken away from you unilaterally, right? And the penalties assessed. Yeah, and maybe you can argue, reasonable cause and get the penalties abated or mitigated. But in that case, I mentioned to you with this, $450,000 bill on the receipt of a gift from a non-U.S. parent, we got the penalty removed. It took 4.5 years. So, I'm a nice guy. You don't want a 4.5-year relationship with me. It's just, the stress, because we didn't know what was going to happen. So, the taxpayer, they were mentally earmarking that money and not deploying it in the way that they otherwise would have for a significant period of time. And, eventually we were able to get that one over the line, but there's no guarantee, and it's a heck of a lot of aggro, and they're professional fees, because that requires, high touch intervention.
This is kind of going on topic a bit, but do you have a sense of why it took 4.5 years? It sounds like, could you to the uninitiated, it sounds like, oh yeah, this happened. I'll engage a lawyer. We'll prepare a statement as to why I qualify for reasonable cause. Job done. You think you naively think, oh yeah, I'll pick up the phone, have a word with them. They'll scratch it off. I'll crack on with my life. What's the reality?
Well, I mean, in this case, the initial penalty notice came in 2019. So, by the time we responded to it, it was a few months and then COVID, right? And then, the IRS, parts of it shut down, and then backlog, right? So that might have been longer than it otherwise would have been. But it was also, it gets into the nuance here. In this case, we didn't argue reasonable cause. The first argument was something different. We said, look, actually, for technical reasons, it was filed on a timely basis. And that argument was actually they didn't even address it. They said, we reject your reasonable cause argument. We said, well, we didn't argue reasonable cause. We don't think it's late. And so then we had to get into reasonable cause. And each of those steps takes, this huge lag back and forth. So I think, COVID was a lot of that. I don't want to say that that's the kind of natural reaction time for the IRS, because that's disingenuous. But even a 2-year wait with that, hanging over your head is a long time.
Chris, the lesson here, if anyone listening, is you don't want this to happen to you. You want to be proactive. You want to take steps to avoid any of this happening. And if it does happen to you, it's rarely a simple fix. So be proactive. Work with experts in advance. Chris, as we wrap up here, can I just spend a minute talking about willful and non-willful? So non-willful, i.e. you've been a naughty boy or girl, you want to avoid criminal prosecution, you go into the program you mentioned. Non-willful, you've got Streamlined is hopefully an option for you, but it's not quite as black and white as that, is it? As in terms of like, people just think, oh, I wasn't trying to dodge any taxes, therefore I must qualify for Streamlined. But am I right in thinking there is some nuance to that? There are circumstances where perhaps you weren't actively evading taxes, but you did other stuff that maybe means you don't qualify for non-willful.
Well, I think clearly it's a case-by-case analysis. Willfulness is a high standard. Right? Often it would be said to be an intentional violation of a known legal duty. There's a lot in that, 10-word sentence. So, clearly there is a gulf between willful and non-willful. I think you're right. And somebody said, well, I knew I should have filed, but I didn't file because I didn't think it mattered. That's starting to sound like willful, right? Known legal duty, check. Intentional violation, check. So, but at some point you tip over on the scale, and so you'll just have to talk through the scenario with the clients. Sometimes you say, when you pin them down, you say, were you really not filing it because you just couldn't be bothered? And they'll say, well, no, actually, I didn't know I had that specific filing. Like maybe I knew I should have been pressing my accountant harder, but I didn't actually understand the extent of my obligations. Now, clearly something like willful blindness, where you're intentionally not asking the questions because you don't want to be told the answer, because if you are, then you have to do something. That's problematic. But I think, there are a lot of cases where people didn't really know what their obligations were, and to say, oh, I had a lingering sensation that I should have investigated, and I didn't. Again, that might not be willful, right? They just didn't know what they were avoiding. So I think it depends on the clients. I think willfulness is quite a high bar. But at the end of the day, if you want to participate in this program, you have to write a statement kind of bearing your soul, and then sign that, statement affirming that your behavior meets the legal standard of non-willfulness. So, sometimes they'll say, no, I'm totally non-willful. And you'll say, are you willing to sign a statement to that effect? And they say, let me get back to you.
I wasn't familiar with the term willful blindness before I got involved in this line of work. And then through many, many conversations with clients and potential clients and just doing this job, it's that concept that really I think could trip. I'm not the attorney. I've never dealt with the IRS. I don't know where the lines are drawn. I don't know what constitutes willful blindness and not. I don't know when seeking another pile of sand to stick your head under, when that causes you to be willful blindness. But that's what I see. I see people who may just forever choose to be blind to this, or maybe they're paralyzed for a couple of years out of fear and indecision, and it takes them 2 years, 3 years, 4 years to pluck up the courage to make a call. Sometimes it's very obvious someone was intentional, and it's very obvious someone was purely accidental. And then there's that middle ground where it's just, you knew about this, why is it taking you 3 years to do anything about it? And or you knew about this, why are you still not doing anything about it? And that's where I sometimes worry, and that's why I just say to people, once you find out about this, deal with it. Speak to the experts. I'm not that expert. Speak to them, get sorted, get in compliance. Good options exist for you, probably. Facts and circumstances, as Chris says, and put it behind you.
Yeah, or at least, because again, there might be, on certain things, there might be questions about whether a filing is required. And you might be able to say, actually, we think there's a good legal position here that you don't need to do X, Y, or Z. Right? But take that decision in an informed basis, because the non-informed decision to not file something because they're not coming for you, or because it's not a lot of money, or because you've never done it, or because you have a mate who doesn't do it, that's not an informed approach to these issues. And so I think that's, I'm happy when people take advice and take a decision, because then they at least know what their exposure is as well. Head in the sand is problematic. But even for those people, I think, have a conversation with somebody, because there could be a way forward, right? Or maybe your exposure isn't that great, but if you're not paying attention, then you just don't know.
Fear stops a lot of people. Fear of the IRS, and fear of the cost involved in taking a course of action, whether it's professional advice fees or tax and interest, or both. Fear is what I think stops a lot of people, and often that, to your point, it would be a lot better if you just dealt with it, and a lot less expensive, and you might not even be that expensive, and you'd remove this cloud from your life. Yeah,
there's when you get correspondence from the government in this country, you might remember it comes in a brown envelope, like an unbleached paper envelope. So when you look in the post, it might not be HMRC, it could be your driver's license or something. But there's something here, people refer to brown envelope anxiety. But it's real, engaging with that brown envelope, engaging with HMRC, engaging with the IRS, that anxiety can really undermine people's ability to take decision and action.
100%. And we get notified of the mail. We get a scan of our mail in the morning, but our mailman doesn't arrive till 5:15. And my wife now knows not to tell me if there's anything from the IRS in there. And I'm not expecting anything. I'm not worried about anything. That, it's only honestly, I've only ever received confirmation of address changes for the business, or a check back from so I've only ever had good mail from them. But if she tells me there's a letter from the IRS in the mailbox or coming that day, that's all I'm thinking about all day. So And
you've got nothing to hide.
Yeah, I work with a cross-border professional. So I do all the right things, and still. So I've got a massive sympathy for people there.
Well, I think this is where some of the empathy comes from, right? Because if someone, before you got into this practice, or you just told somebody in the street that the anxiety and the fear that people feel is so real that it prevents them from engaging, you would say, that's crazy. Just open the damn envelope. But when you hear on the phone or in person meeting people, week after week, who have the same story, They wanted to be compliant. They wanted to get back in charge. They wanted to get out in front of things, and they could not do it. You realize that those people aren't, they haven't all gotten together to tell you that story. That's a real thing, right? And so from that, I think, comes some of the empathy, because you're dealing in some cases, not every case, sometimes people just can't be bothered, with people who, in many ways feel themselves prevented from helping. And so, that's where we see ourselves as trying to get them across that, difficult moment. You just see it far too commonly.
Great. Well, Chris, I think this is a great place to leave it. I hope this reaches people. I hope people listen to this, and maybe it spurs people to take action, and it relieves a burden from their mental state. I also hope that it means that you and I have to repeat ourselves a bit less. We can point people here first, and then we can talk about it, rather than starting from scratch, because there could be a lot of repetition involved in that, which is obviously fine. It's part, we know it's part of the job, and we're happy to do it, but maybe it will warm people up.
Yeah, exactly.
Chris, thank you so much. Where can people find you?
Well, our website is MK, as in McLemore Konschnik, MK Law London, that's all one word.com. And it has our contact details and information there. And yeah, if people have questions or issues, obviously I'm happy to speak to them, whether it's a domestic streamlined issue or some other issue in particular related to international informational returns or other issues like we've discussed.
Wonderbar. Well, Chris, thank you so much for coming on and talking about this. I hope you'll come on in the future to talk about other stuff as well. And I appreciate you.
Yeah, my pleasure.
Cheers.